In times of uncertainty, you actually want to be deploying.
If you think in decades and you're a venture investor, you can kind of just put the stuff out of your mind, which is what I'm doing.
I sent you guys this tweet from Morgan Housel, who is a great guy. The shock cycle. And it's this beautiful cycle. Assume good news is permanent, oblivious to bad news. Then you ignore the bad news. Then you deny the bad news. Then you panic at the bad news. But then you accept the bad news. And then you ignore the good news. You deny the good news, you accept the good news, and then you assume the good news is permanent. That starts a cycle. I actually think we're in the part of the cycle here where we're starting to ignore the good news. And we're so negative, and we're so emotionally wrapped up in everything that people forget that actually the world tends to keep moving forward. And so I just think it's important for people to take a step back and take a really deep breath. But I think that there's a lot of good news out there.
I think what's going on is there is some underlying good news, right? But there's this overhead of a small chance of something catastrophic happening.
Начну с того, что современная Украина целиком и полностью была создана Россией.
In times of uncertainty, you actually want to be deploying. I announced the solar deal, I put $228 million into this thing. And then I did another deal. I put $45 million into this thing you guys know about. But other than that, I've been literally white-knuckled. I don't like to open the stock app. There's no point.
Take some Dramamine before you open your Morgan Stanley account.
The stock app. And what's so funny is like my Bloomberg terminal, which is right beside me here at my desk, I have not logged into it.
Oh, God. Put it in a drawer. Unplug it.
Yeah. There's just no point. At the end of every week, I get a report, right? Kind of like our P&L. And I just look at the top line, like Connor always sends me the top line is like, and the last like 8 weeks in a row, we've lost 1%, we've lost 2%, we've lost 3%. The time that it was
Sachs
like
wishes he lost 1%.
3%. I celebrated. I got so drunk that night. I was like, finally.
This is where it really does help, right, Sachs, to think in decades. Like if you think in decades and you're a venture investor, you can kind of just put the stuff out of your mind, which is what I'm doing. And the great thing is I'm seeing amazing companies, great founders. Deals are taking longer to close. People are starting to do diligence again. And people are discussing what the right valuation for this early stage startup is, which is good. That's healthy. I think we're getting I don't know what you're seeing in the early to mid stage market privately, but I'm seeing really healthy discussions, and late stage madness is gone. It's over.
Yeah, I mean, I think 100 times ARR is over, but no one really knows where it's landing. So I'm seeing some deals get done at 60 to 80 times, but no one really knows where it should be. I
sent you guys this tweet from Morgan Housel, who is a great guy, and he has this fabulous tweet. He says. It says the shock cycle. And it's this beautiful cycle. Assume good news is permanent, oblivious to bad news. Then you ignore the bad news. Then you deny the bad news. Then you panic at the bad news. But then you accept the bad news. And then you ignore the good news. You deny the good news. You accept the good news. And then you assume the good news is permanent. That starts a cycle. If I could just put it out there, I don't know today if you guys saw non-farm payrolls, but we had a huge print in unemployment, like really great print, meaning like a lot of employers were able to find people to take jobs. It was a big number. But the interesting thing about it was we didn't see wage inflation tick up with it. And if I had to look at that, and if you actually look at a bunch of the earnings reports that have come out in the last 3 or 4 weeks, I actually think we're in the part of the cycle here where we're starting to ignore the good news. And we're so negative and we're so emotionally wrapped up in everything that people forget that actually the world tends to keep moving forward, right? We are not in World War III by any measure. We are not anywhere near that, okay? And so I just think it's important for people to take a step back and take a really deep breath. But I think that there's a lot of good news out there.
There's a ton of good news. And for people who don't know the term,
and we're ignoring
for people who don't know the term print, when we say there's a print, that is just a colloquialism in the financial markets that something was formatted for printing previously and you got good news. So an official report is sometimes called, we got a print.
I agree with, I think what's going on is there is some underlying good news, right? But there's this overhead of a small chance of something catastrophic happening. So how do you price that in, right? It's like
a one-outer, right?
Yeah. Yeah, exactly. But
this guy can hit quads. We're set over set. Yeah.
It's a 1 hour to the apocalypse, basically.
If that tiny probability thing happens, the game is over. So, why even worry?
So it doesn't matter. It doesn't matter. Like, it doesn't matter.
So
the cost of your house doesn't matter if there's a nuclear war.
That's right.
This is the thing that people underestimate is like, that's not a risk that one should be hedging in any way financially, right? At that point, the only thing that matters is the health and safety of your family and your friends, but really your immediate family, like, can you take care of them and make sure they're safe? And so, if you're an investor in the financial markets or you're building a company, managing for that externality, in my opinion, I'm not sure makes a ton of sense, because I don't think you can manage to that externality.
You have no impact on it.
It's cataclysmic.
It's something
it's
completely out of your control.
Scenario. Yeah. So I think you have to manage to the 99.999% of normalized outcomes. And I think right now there are some what's called green shoots, meaning like some positive news in the world and some positive data. By the way, the other thing that we saw today this week was Jerome Powell. And, the Jerome Powell testimony was also in the middle of massive amounts of bad news, some actually pretty decent good news, which was he said he's going to raise by 25 basis points in March. Everybody knew that, right? So we took the 50 basis pointer off the table. But then he was very clear that they were going to be data driven. And in the language of the Federal Reserve, what that essentially means is like, we're going to be patient and wait and see. And if you couple it with what I said before, which is the economic cost of these economic sanctions towards Russia can be calculated. And I think that we have proven a willingness to print capital and money. And so if you put those two things together, I think there could be a real possibility that Powell becomes very accommodative. And, he and Biden and the entire administration come together with Europe and everybody else and say, get the money printer back going, because we're going to stand the line on these economic sanctions, and we're going to sort of soft land the economy here because we think there's recessionary risks afoot.
Let me just provide a little bit of a counterpoint, which is where I'm most concerned. We don't know what the repercussions are fully in a dynamical system of global capital, of pulling out this much capital and devaluing assets at this scale so quickly. The shock to the system, I don't think, has yet been realized. And I think we'll know at the end of this month when books close what things actually do to businesses, to swap agreements, to trades, trade balances that are outstanding. And you could talk about economic stimulus as being the way to solve that, but we don't yet know what's broken. And they're like, let me just give you guys another example. Today, corn, I think, is trading at $7.60 a bushel. That hasn't happened, guys, I can't tell you in how long. This was a commodity that was trading at $3.50 a few months ago. And so we're now talking about that, the trickle-down effect of that price into the beef. The trickle-down effect, as we're already seeing in California or San Francisco, where the average price per gallon of gas at over $5. The trickle-down effect on purchasing behavior, on businesses defaulting because suddenly their counterparties dry up. We don't know, and we won't know. And it's not
actually,
just
we know some of those.
We know some of them, but we don't know what we don't know. And the thing I'm concerned about is imagine when I say dynamical system from a physics perspective, it's like take 100 slinkies and tie them together into a giant graph of slinkies. And you start punching one of the slinkies like this. If you punch one or two of the slinkies hard enough, you don't know how the repercussions will cause a slinky all the way over there to suddenly shoot up or shoot down.
But you're also denying your ability to change a different slinky. That's the whole point of a dynamical system.
You could put energy back into it, but we don't know what's broken, and there could be something that's irreparably broken.
We've gone through these things before, and I think you're not learning from history, or you're at least not willing to admit it. But
no, I think
hold on a second. We've seen it in TARP. Okay, we did not know the total extent of what happened in the GFC, and we had to invent a financial framework to soft land the global economy. We figured it out. When we went through LTCM and John Merriweather blew up.
Explain what that is.
There was a huge hedge fund in the late 90s that basically had a massively levered exposure to the financial markets to the tune of like tens or hundreds of billions of dollars.
Go read the book When Genius Failed if you want to read the story. It does a good job summarizing it, but it's a great story. Yeah, go ahead.
And again, we had to step in with a governmental framework and a broad infrastructure of actors across the world to soft land the financial economy in a way, not knowing what the actual, what part was broken. So I just fundamentally disagree with this idea that we're running blind.
Yeah, look, I'm talking about capital and energy and food. And some combination of those things are going to cause some serious deleterious effects on people and on markets. And look, I get it, Chamath. I know that there's solutions for repair, and I know that we're going to act swiftly and aggressively. And every time, by the way, I just want to point out, in each of those scenarios you've talked about, we've acted more swiftly and more aggressively than we did in the scenario prior. And it's getting to the point that, what is the value? How much debt, how much deficit are we really willing to take on? Everyone obviously has these kind of, intrinsic existential questions about how much we really can act long-term without the dollar collapsing. But certainly in the context of a global economy collapsing, the dollar will always be the safe haven. But there are other things at play here, like the cost of gas for the average American, the amount of wheat and the amount of food that people in Africa are going to have access to.
What you're saying here, Freeberg, is that some of these things we have been through. And if you look at gas as one example, I think you're bringing up the important ones here, food and energy, gas. We actually know what happens when gas prices go up. We saw that not long ago. People bought more hybrids and the miles per gallon per car. When you raise prices, consumption goes down, and people get creative.
Adjustments, Jake. I'm talking about the short-term acute effects.
The thing that America has the ability to do is they have the ability to change the financial incentives for actors all around the world in a split second.
And behavior can change.
And so I actually think, Freeberg, the nuanced thing that you're saying, which I completely agree with, but maybe we should say it more explicitly, is it probably is a reasonable way to manage risk in America, Europe, Canada, Japan. But what's going to be very, very difficult is the impact that this has on emerging markets in Southeast Asia, Africa. Could be really, really deleterious for some amount of time.
And sad. And it's going to cause a humanitarian problem. It's really friggin' sad. And it's, whatever progress has been made could be unwound.
I think you're right. By the way, I think that is actually really the risk that I think holding the line on these sanctions really does. It pushes the risk towards EM countries. And then I think we're going to have to figure out what our moral resolve is to go and fix those.
And that's my point earlier, which is we're going to bear the cost ultimately. The United States is going to have to step up in a really outsized way to solve this problem. And while we might not be sending troops on the ground, we're going to end up paying several trillion dollars.
I don't know that it's going to be just the United States, Freeberg. The United States seems to be working in coordination with our allies in this situation. We're not acting unilaterally anymore. That's a good news.
We're going to have an economic cost, right? There's going to be something.
There's no amount of money that you can actually put on human life. And so if we can avoid a military war, I just think that there's no red line on cost there. And so if we end up running massive deficits and now we're at 150, 250, 300% of GDP, I think that morally that is the right thing to do.
Sachs, is the world becoming more
idealistic and realistic?
Let me bring Sachs in here. Sachs, is the world becoming more anti-fragile / resilient? Pick one of the two, I guess, to these kind of upending events because of COVID, because of China pulling out of financial markets. We just went through this. Freeberg was like, hey, this is unprecedented. Actually, I think we have a little bit of a precedent here. We have the complete shutdown of the economy from COVID in recent memory. And we have China deciding that all these companies are no longer public. We've seen they did their own economic sanctions. They sanctioned themselves and pulled out of markets. So what do you think, Sachs?
I mean, I think the current crisis is a reminder that it's not too anti-fragile. I think we are in a transition. The Cold War ended about 30 years ago, and since then we've been engaging in this sort of unipolar foreign policy where America calls all the shots. Now the world is becoming more multipolar. I'm not sure it's all the way there yet. And you have countries like Russia and China reasserting themselves, and that's making the world a more dangerous place.
Well, you also have the EU working together in unison, and they seem to be, maybe they're going to become a bigger actor here because of this, right? We're seeing them take a bigger...
That was sort of a positive surprise, as long as they don't pull a Franz Ferdinand like Freeberg said and inadvertently blunder us into a war.
Okay, folks, this is This Week in Dystopian